Hi everyone, so today me and my teammates will be talking about treatment and calculation of goodwill. Next. So these are the main ideas that we will discuss today. The first one is definition, explanation, formulas, work example, and the summary. Next. So first of all, have you ever heard the word goodwill? So basically, goodwill is the value of a brand's name. We can also call it as an intangible asset. In other meaning, we can also define goodwill as the difference between market value of a company and the fair market value of its net asset. So market value is the purchase price of a company, while fair market value is the net asset of a company. In other words, we can define goodwill as the purchase price minus the net asset. The difference between those subtraction will be the value of a brand. Next. So why goodwill exists? There are actually many reasons why goodwill exists, but the most crucial thing is because of the company's reputation and customer relation. For company's reputation, this includes the good public perception. So when thinking of a product, people will instantly remember this brand, meaning that this company have a really good reputation. While for customer relation, a company have a great amount of customer or market, which a company like to engage customer and gain customer trust. Next. So the next one is about crucial factor. This includes revaluation. What is revaluation? Revaluation means revalue asset and liabilities to be corresponding, equal, and reflect to the real asset and liability usage rather than its true value. So the value of the asset and liabilities is based on the real condition and real value. This is important for the company which has merged to revalue their asset and liabilities to make it like their real condition. Next.
Okay, so the next one is prudent. What is prudent to be exact? Prudent basically means evaluating the assets and liabilities of a firm being sold at a fair value at the moment of sale. So the purchase price would represent the current value of the assets and liabilities instead of its historical value or worth. Prudent is also known as a practice that ensures the company is not overvalued by preventing the income and assets from being overstated in the company's reporting. Next.
When a company is bought for more than its book worth, the buyer is paying for intangibles like intellectual property, brand recognition, skilled personnel, and customer loyalty. The presence of goodwill indicates that a company's worth exceeds the sum of its raw assets. Companies with a lot of goodwill command higher acquisition prices by definition. How do businesses increase their goodwill? Goodwill may grow for a number of causes. This includes the value of the brand, customer base and its loyalty, the quality skills of the workforce, and the location and reputation of the company. Other factors to consider are the company's supply chain and anticipated future sales and profitability. Next. In the statement of financial position, goodwill formed when a firm is bought is classed as an intangible asset that should be amortized during its useful economic life. This follows the accruals idea and provides a balanced view of the accounts over time. According to the accruals concept, revenues are recorded when a transaction occurs rather than when payment is received and paid. Revenues and costs should be recognized at the same time according to the matching principle. A judicial judgment in 2001 barred the amortization of goodwill as an intangible asset. However, sections of the judgment were reversed in 2014. Private corporations can now choose to amortize goodwill on a 10-year straight-line basis, albeit this option is not necessary. However, this may be considered to be in tension with the prudence concept, which suggests that the sum should be written off immediately since it may be difficult to prove that the goodwill will be present in the new firm. Because the value and advantages of goodwill are extremely subjective, estimating the number of years the firm would profit from it is challenging. The overarching argument, on the other hand, is that the corporation will most likely profit from the goodwill for a number of years. As a result, it appears that amortizing the expense over a year will be preferable. Goodwill is negative when the acquisition price is less than the fair market worth of a company's assets and liabilities. Next.
Okay, so let's take a look at Dior, McDonald's, Shopee, and Baskin Robbins. These are some examples of goodwill. Each of these brands has their own uniqueness that makes them well known in our society. For example, Dior is known for its elegance and timeless femininity. McDonald's is here because of their franchising model. They are super consistent and they keep innovating on their products. Shopee's massive growth and popularity is the result of its dynamic work model and an essential expansion plan in the Southeast Asian region. And lastly, Baskin Robbins is known for its 31 flavor slogan, with the idea that a customer could have a different flavor every day of any month. As we can see, these brands have their own unique selling point that makes their value in the market higher. Are there any positive impacts by having high goodwill? As a result of these brands' big names, this makes their goodwill higher compared to the other less famous brands. By having higher goodwill, brands can generate a boost factor that can make their company gain more profits. There are also some formulas we must know. The first one is to calculate goodwill is by subtract the purchase price and fair value of assets and liabilities taken over. Purchase price is the amount of money someone pays for something, while the fair value of assets and liabilities taken over is the amount for which it could be exchanged, respectively, on that date between two knowledgeable, willing parties in an arm's length transaction under market conditions. Second one is to calculate net assets, is by subtract the assets and liabilities. Assets is something that provides a current, future, or potential economic benefit for an individual. Liabilities are legally binding obligations that are payable to another person. We can find purchase price by adding the net assets and goodwill. Net assets is the value of all the non-financial and financial assets owned by an individual or institution minus the value of all its outstanding liabilities, while goodwill is the value of the brand's name. Lastly, we can calculate SIP or statement of financial position by adding total assets and total equity. Total assets is the total amount of assets and total equity is the total amount of equity.
To understand more about this topic, let's take a look at the worked example. Here we can see that Chang Tao Retailing PLC has valued the goodwill of Greco Stores PLC at 2 million. The statement of financial position of Greco Stores PLC at 30 November 2019 is provided as follows. Assets, which include non-current assets at 18 million and current assets at 6.5 million. By this, we can find the total assets by adding the value of non-current assets with current assets, which is 24.5 million for the total assets. Next, equity and liabilities, which include ordinary shares, £1 at 20 million, and retained earnings at 2 million. By this, we can find the total equity by adding the ordinary shares with retained earnings, which is 22 million for the total equity. But before we calculate the total equity and liabilities, one thing left is the current liabilities at 2.5 million. Now, we add the total equity with the current liabilities to get the total equity and liabilities, which is the same as the total assets before at the value of 24.5 million, meaning that it's balanced. But this is not the calculation to solve the problem. We haven't found the solution to this question. This problem asks us to calculate the purchase price paid by Changtao PLC. Before we solve any problem that includes goodwill, we need to keep in mind that net assets can be calculated by subtracting assets and liabilities. Now we calculate the goodwill and purchase price. It doesn't really have any much of a difference from the one we just did. The difference is only that in the new solution, we need to add cash and cash equivalents to the assets and find the goodwill as well as the purchase price. The cash and cash equivalents are valued at 2.5 million, and this will subtract the non-current assets with the current assets. Now, our new total asset will be 22 million. As for the liabilities, it includes current liabilities at 2.5 million, but the only difference is now we need to find the net assets as well. To find the net assets, remember the formula before. We need to subtract the total asset with the current liabilities. This will then give us the net asset at a value of 19.5 million. With the goodwill at the value of 2 million pounds, we can get the purchase price by adding the net assets with goodwill, which will be 21.5 million.
So to sum it all up, we have made a summary just to review back all of our materials covered. So what is goodwill? Goodwill is basically the difference between one firm or company's brand or market value and the value market of its net asset. Goodwill can develop through certain ways, some of it including the value of its brand or name, the skill of its workers, location of the firm or business or company, its reputation, and more. Some common examples of goodwill are like mentioned before, Dior, MACD, Indomaret, and more, where all of them have value to their brand or name, location, reputation, and more. E.R. Waite once said, goodwill for a business is built by good goods, service, and truthful advertising. And that's all from us. Thank you for listening. We hope our presentation is useful. Thank you.